The analysis on open position in profit or loss measure the average performance of your trade while you have other positions open. They might either be in profit or loss. The trades are classified in different categories based on the amount of profit or loss of open position at the time of the new position entry. It is a very tough job for traders not to be emotionally affected by the profit or loss currently having when opening a new trade. It is quite common to see that a trader might become more aggressive or risk-averse when having an open position in profit or loss. On the one hand, a trader may feel enthusiastic, maybe even unbeatable when having quite a big profit in the open position. On the other hand, a trader might feel aggressive, annoyed, or scared when having position deep in loss. Those are not the only format of emotions that may have an effect on your trading. If bad experience happened many times before, a trader might also be acting more cautious in case of open winning trades, not wanting to risk the daily profit. Therefore, placing a very tight stop loss or using smaller position size. In general, trading emotions are not a bad thing per se. However, good traders have to learn to manage their own emotion and know during what kind of emotion better not to trade. This requires transparency, complete openness to yourself, and the ability to track and detect your own emotion and behavior. This is one of the toughest things to learn on the path toward profitable trading. Additionally, certain emotion can actually help the trader because it enables a quick and to-the-point decision-making, yielding good payoff for the trader. There is no all-fit-one rule on what kind of emotion happens in which situation and which emotion might be loss-making or profit-making for you. Therefore, it is so important to analyze yourself based on data, detecting your special strengths and weaknesses in order to boost your trading results. Looking at a chart, we see the average performance per trade depending on the amount of profit or loss of open position the trader had at the time when opening a new trade. We can observe that this trader had the best payoff in case there was no profit or loss of other open positions with 3.2 pips. When a trader had other open positions which were more than 2% in profit, the new trades were still profitable. However, a bit less compared to when having no open trades. Apparently, the trader is somehow influenced in the decision making. If the trader had only minor losses of less than 2% in open trades, the new trades were also less optimal. However, by far not as much as when having a deep loss in open positions. In fact, moving with the cursor over the bar, we can see that the trader made an absolute loss of 2,223 USD from trades when having open position with more than 4% loss at that time. This represents an average loss per trade of minus 3.2 pips or minus 0.36%. The number of trades performed in this group were 111. Being a significant amount compared to the overall trades. It becomes very obvious here that this trader is negatively affected in the decision-making when facing loss in the open positions, even to the degree that the trades become loss-making on average. Trading emotion might be the reason for this, driving the trader to use aggressive risk-taking. In fact, comparing the loss and average number of pips and return, we see the return is even worse than the pips view, meaning that the trader used a higher amount of lot size in those trades. This drives the negative payoff even further. Having identified such a loss-making pattern, the trader may want to detect the emotions that are actually driving the thoughts when opening trades while having a loss in other trades. Using a trading journal to list down your own emotion can be a very helpful tool in such instance. Additionally, the trader may choose to limit the trades and lot size during such scenarios, limiting the negative payoff. One has to keep in mind that this trader is overall making a profit, so completely stop trading in such instance may have other effects on the overall trading performance as well. Therefore, it may be a good strategy to first of all limit the influence of such trades, for example, through the lot size, and then deep dive further into the reasons for such trading behaviors. When you are actively working on your trading behaviors and want to check your progress, it is advisable that you also check your short-term trade history with the 1 month and 3 month charts, allowing you to compare your payoff in the recent past to your total performance. In your trading output, you may also identify specific trends of yours, such as an outperformance during times with a small profit in open trades. You can leverage such knowledge and actively seek trading situations like this. It is important to have your view on your specific strengths as well. Limiting loss-making behavior is only the one part of the equation. Knowing and using your strengths can well boost your performance as well. In general, this chart can be useful for all scalpers, swing traders, and day traders. Of course, for scalpers, there will most likely less instances in which trades are open while other trades are still running, therefore somehow limiting the power of the output. However, for other traders, the analysis may yield very important results assessing their trading behavior. A closely connection analysis will assess your trade performance after a daily loss or profit based on closed trade. While not as directly visible to the traders such as open trades, it may also be holding interesting information on your trading performance. Potentially, limits you can set yourself after daily wins or loss. This will be explained in another analysis video. In case you do have a significant loss-making pattern due to the profit or loss level from open position, you may choose to receive a notification from us warning that you have just entered another position, although having a specific profit or loss with your open position, which on average end up with an underperformance in your trade. Trading can be very demanding, and a little technical support may actually help you to free your mind and focus better.